Hello, and welcome to this session of FTT from wherever you're joining us today. Yesterday, we looked at transforming payments, and today we're focusing on operations. Now, I recall my first job after university was designing a cash forecasting process for the Treasury arm of British Petroleum, and since then, every role I've undertaken has included cash forecasting. The approach and technology has come a long way since the days of Lotus 123, thankfully. And today we have a range of technology solutions from Excel, TMS, and ERP through to specialized cash forecasting software. But the one thing they all have in common is the data that sits behind the information. Joining us today is the BearingPoint Treasury team led by Group Treasurer Evelyn Stam, supported by Senior Business Consultant Fynn Krüger, who share how they implemented a data-driven cash flow forecasting process using the CashAnalytics cash flow platform. Their new cash forecasting process gives the Treasury team visibility of actual and forecast cash flows over a 13-week period across their entire business, which in turn supports a range of day-to-day and strategic Treasury activities. We're also joined by the founder of CashAnalytics, who will be sharing his own insights and perspectives. Now, as always, a bit of quick housekeeping. Hopefully this is all familiar to everyone. Q&A, really important, makes it fun for us. Sometimes puts our panelists under the heat, which is not always a bad thing. So keep them coming and make sure they're hard. A reminder, the session is being recorded. It'll be available on the event platform at the end of today for 14 days. And as always, we'd love to hear your views. Get involved on hashtag ACTFTT, Twitter, ACT Update. And yeah, we'll get going. So some introductions. My name is Naresh Aggarwal. And after 30 years working Treasury, I now provide policy and technical support at the ACT. Cash forecasting always comes up in my conversations with treasurers. I'm looking forward to hearing from a team that's recently worked on this. Joining us today, we have Eveline Stam, who is Group Treasurer at BearingPoint, Fynn Krüger, who's a Senior Business Consultant at BearingPoint, and Conor Deegan, who's a co-founder and CEO for CashAnalytics. Now, Conor, I know from our conversations before, you're really passionate about this phrase, data-driven. What does this mean to you, and why do you feel it's so important?
Yeah, great question, Naresh. And firstly, hello to everybody on the webinar today. Thanks so much for taking the time to join. Yeah, I suppose for us, Naresh, data-driven is, I suppose, a lot more than a phrase. It is something certainly I'm passionate about, that we spend a lot of time on here in CashAnalytics, and I think it's a really important place to start the discussion today. I suppose data-driven in summary or data-driven process in summary, it is a process that is, I suppose, where data does most of the work and provides most of the answers, right? That's probably the easiest way to look at it as the starting point. Typically a data-driven process is characterized by low amounts of manual work, and the effort that is put into this type of process is for the most part spent on the analysis and understanding of data. Okay, it's important to, I suppose, frame up front as well a couple of things that data-driven is not. It's not fully removing a person from the process. Any forecasting process of any duration will require some form of human input, right? But that input and that work from a human is very much focused on the higher value end of the spectrum, right? So the analysis and understanding of the data. I suppose it's also important to point out up front that, particularly when it comes to cash forecasting, data-driven isn't about going away and trying to find an entirely new data set, right? The data that we work with in every situation, including with BearingPoint, is in the organization. It's relatively close to hand. It just has to be, in most cases, uncovered by the Treasury team. Okay, so yes, it's data-driven is something we're deeply passionate about here in CashAnalytics, and it really, just to, I suppose, reiterate, it's data doing the work and data providing most of the answers.
Awesome. Well, thank you very much, and I can already see the passion. You obviously get very excited by data. So first of all, thanks for setting this frame, and now I'd like to turn to Evelyn. Could you tell us a bit about the organisation, an overview of the project, and why did BearingPoint embark on this project?
Yes, hi, good afternoon, I guess. No, morning it is still. Evelyn Stam here in Amsterdam. Yes, I am with, BearingPoint. BearingPoint is a consulting company. I joined in 2012 as a consultant in the financial services. BearingPoint has its roots from KPMG. KPMG then shifted a part of their consulting, and it eventually became BearingPoint. 2009, there was a management buyout, so of the European part. So very much a European company with you'll see some numbers in a minute, but basically consulting is at our heart. And in addition to that, we've always been doing software solutions type of projects as well, and even more recently where we have IP services. Company, in the next slide, you'll see a few numbers. So large company, we're in 23 offices in over, there's some around 800 million in revenue. We have 181 partners and 41 offices. And I joined as a consultant, later on then moved into the treasury. I was asked to do a project there, an internal project, and I ended up becoming the group treasurer. So I've been doing that since 2012. And it's nice to come back. My background was banking and consulting, and in a way it's nice to then be in a place where you're seeing both sides of it. And I think as a natural, I like to think as a consultant and try and change things. So we've already been implementing a few points, but certainly, or projects, put it this way. But certainly the cash forecasting, since I joined, we were doing the same way with spreadsheets. We tried to improve the spreadsheets. But basically, what you see here in this slide is the way we looked at our cash forecast. It was a lot of information coming from actuals, coming from different places, and then the forecast would also be coming from different sources. And I think our key main pain points that we were feeling is it's, when you have that many companies and entities doing their forecasting in different places, and everyone is sort of doing it but we did it in an Excel. Later on, it was put in SharePoint. Everyone has their own place to do it, but it's still very, very manual, very dependent on Excel. People were looking at different sources and putting it into their overview. We were getting the firm-wide overview, but then the reporting is also limited. It was hard to look at the trends. It was really hard to analyze it. It was we couldn't really drill down on anything. And we also noticed that the accuracy was not as good as we'd like it to be. Fortunately, it was often quite conservative. So in the end, we were sitting on more cash, which in this time is not, no one. I mean, it's nice to have a lot of cash, but then you need to know what to do with it. So in that sense, this has been a pain point for us. And I would say, when COVID started, there was all of a sudden a lot of interest and focus on liquidity, and therefore we got more people involved in the forecasting. We were working with our banks. They wanted to, we wanted to have more liquidity, and therefore we also needed to be able to show our cash forecast more clearly. And I think there we realized, it needs to be improved. Our cash forecasting, it needs to be more sophisticated. The data is there. How do we work on this? And then we were very lucky to get Fynn involved. He was came in from the internal finance group, finance and treasury group, and helped us to create a project and go through the stages of where we are now. So that's in short where we the start of the project. Maybe just to say a little bit about the project. So it's so we work with a steering group where we have our COO and our CFO, and also a partner in the financial services part of our consulting, and Fynn and myself and another colleague from Treasury, and also someone from controlling. So quite a large steering group. Then a very, I would say, small core team, which is our Treasury group. That's three of us, and with Fynn, and with our head of controlling. And then we work with all the controllers, and I would say in total that's a group of about 20 users there that we've been working with. In addition to that, we worked with different people in SAP, different people working with our Tagetic, our forecasting tool. So in that sense, not a huge project, but very focused, small group. But of course, there's a lot of users and stakeholders.
I would say it sounds like there's quite a lot of tentacles, very typically with cash forecasting projects.
Yeah, and of course on the CashAnalytics side, we had a dedicated project manager, also an expert in the system. We had regular meetings once a week with CashAnalytics and with our core team as well. So, and we'll show you a little bit more how we, how the project was organized and the stages of the project.
Super. So I think, Fynn, that's an introduction through to you now.
Yeah, thanks a lot, Naresh. Yeah, as Evelyn mentioned, basically what we started with in more or less end of 2020, beginning of 2021 was a lot of symptoms of the pain, as Evelyn described it, that we were feeling. So the first step that we really had to go to is pinpoint the pain that we had, so the symptoms to the root cause of where that pain came from. And here it was really crucial for us to go to everybody who was involved in the process of creating the forecast and really talking to everyone. So it wasn't just something, some project, some idea coming from the ivory tower, but really, as Evelyn mentioned, going to the controllers that are in the end the main contributors to our forecast, looking at the ways that they currently or back then did their forecast, what data they took, the approaches they applied in getting the forecast together. And what we saw there is basically what you can see here on the screen as the little bubbles, which are the key issues that we identified, mainly around unharmonized approaches of taking data, bringing the data to a forecast, a lot of manual work, little alignment between the entities when it especially came to intercompany trading and intercompany receivables, but also some, I would say, larger issues that we uncovered with regards to processes that lay way upstream of the forecasting itself. May it be things like bank statement reconciliation and SAP. So we saw on that moment basically that we had two fronts to tackle. So on the one hand, we had the process that needed harmonization, that needed transparency all over the entities. And on the other hand, we needed to get rid of all these manual steps. And here it was really, really crucial for us to identify, okay, what actually are the steps that need to be taken throughout all the entities, not just for what steps does Germany, what step does France, what does Ireland do, but really how can we harmonize these steps throughout all entities? How can we harmonize the data sources, and then also the way that the data is pulled from the respective sources and put into the forecast itself. And here it ties back to what Conor has described with the data-driven approach. So we needed, on the one first, to really pinpoint these issues down in the way that you can see it here. Identify the ones that we were able to tackle basically by implementing then ultimately a centralized cash forecasting platform, where we decided for CashAnalytics, and then really get the buy-in from everybody involved, from really controlling over accounting to treasury to our very senior leadership, to also tackle issues that arose upstream of our forecasting process. So maybe when now looking at the landscape that we actually had to deal with, so basically the ultimate outcome of the analysis phase on the technical side, we saw that the main data sources that were consumed by our controllers consisted, as you can see here on the left-hand side, out of 4 systems in general. So we had our ERP data, so probably not much of a surprise for anyone involved in forecasting processes, that a lot of the data that you actually need for your forecasting, especially on the shorter term, being it open items on accounts receivables, accounts payables, is sitting on your ECC system or ERP system. In our case, it's been an SAP system. We had the more long-term forecasting data coming from our CRM. I mean, Evelyn mentioned we're a consulting business, therefore extremely project-driven. Our longer-term forecasts are sitting basically in our projects. And that combined with the general P&L forecast to tie together the revenue side and the disbursement side. So we had our P&L planning instances to be integrated to the cash forecasting solution. In our case, it's been Tagetic. So we had actually the system switch during the implementation from SAP BOFC to Tagetic, which spiced things up a little bit. And ultimately, we had, of course, when you're looking at forecasted cash flows, you always have to look at historic cash flows. So we had our bank balances and bank transactions coming in from TIS. And also here, again, talking about upstream processes, we decided not to take actual cash flows from our SAP solution, as this would mean that we had to completely revamp our reconciliation processes in the accounting businesses. So we here decided to rather go for our payment solution and banking solution to feed the bank statements in. Besides the pure technical interface, we also had, I would call them departmental interfaces. So data that's not directly coming out of systems, but rather coming out of departments, especially with regards to taxes. That's always, quite hard to get directly from a data source other than a person. Same goes, of course, for the more confidential, but nevertheless extremely cash relevant information like M&A, share issuance, buybacks, that you would probably never get directly out of the system. So also here, we went rather the approach of identifying the correct person to feed the data into the system instead of an interface.
So Fynn, you've obviously got a lot of boxes here and lots of, as you've said earlier, a lot of different inputs coming in. Conor, I'd like to sort of turn to you. I mean, how typical is this with regards to the clients that you come across?
I think the slide that Fynn has here, Naresh, is very typical. But maybe just before I maybe just provide a further comment on that, just a couple of comments on the previous slides and some of what Evelyn and Fynn have said. I think one of the challenges that we see treasurers facing at the very start of a project like this is knowing where to start, right? And I think that's when we were speaking to Evelyn a couple of weeks ago. She described it quite well. And this time last year when she knew she needed to do something, it was almost overwhelming to well, where do we begin? And I think what Fynn in particular has described on the previous slides is something we always encourage people to do when they approach us initially, or when we're talking to them initially. Is we of course can provide the software solution, and we do. However, there is a process to go through before you can get near a solution, and I think the process that BearingPoint went through is almost textbook in that regard. I know it is their business; they are a consulting firm, so they do that well. But and it really does, just to, I suppose, to use your term, Naresh, it's to identify those tentacles right in the process, right, and to on one hand look at the problems and the challenges that you're facing, and on the other hand look at the requirements, right, and then you can start to tick off, well, what do we really need to focus on here? Focus on solving every single problem, regardless of its importance, isn't generally a good idea. So I think certainly the couple of slides that Fynn has shown is for anyone who's considering this process or doing something similar, to take those slides and apply them to your own business is a very good starting point. So so just a few comments on that up front. In terms of the data, I think BearingPoint very much is 80% of what we see on a daily basis, right? The ERP system and the bank. So if you take TIS, which is their source of banking data, and the ERP SAP, which is the source of their payables and receivables data, they are really the heavy duty data sources. They're the highly transactional data sources, the data sources that are refreshed on a very regular basis. So naturally, that's where most of the focus goes, and the actualization of forecast data and the creation of the short-term forecast is probably the most, in some cases, the most time-intensive thing to do on an ongoing basis. And very much where our focus is with our new projects is helping our clients understand that data and also linking into the data sources, right? So, 9 times out of 10, that's exactly what we're doing up front, or looking at these type of data sources. The interesting one, and the one that's necessary for the medium to longer term forecasting is very much capturing some form of budget or business forecast. Okay, in BearingPoint's case, this is CashAnalytics, which was, as Fynn has said, replaced during the project. But the other most common budgeting tools we come across are the likes of Cognos and Hyperion and SAP BPC, right? So, but all containing roughly the same information, your budget data for your different areas of your business. But yeah, in summary, this is 80% of what we see.
And I guess just sort of thinking back to my first days at BP, it doesn't really. The key thing is making sure that you've got all the right data points and it's coming. You haven't missed anything material out. And I guess part of the challenge is around agility as well. And I think we'll come on to that during the rest of the time. But thank you very much, Conor. So, Evelyn, you shared a little bit about the sort of various stakeholders and the groups that you had. Could you tell us a bit more about the sort of project stages and some of your key learnings during this exercise?
Yes, sure. We maybe just as you see in this overview, we of course did this as-is analysis, RFP. I must say, I've done a lot of RFPs in my life. I think this one went, we were very much on time the whole time. And I think that's due to just some really good project management. We looked at different players. So yeah, that happened, I guess, starting around, from January to June. Once we made the decision, we were hit. The summer was coming in, but we were able to really do quite a bit in the summer. And it's amazing, I guess, when you look at the projects nowadays, a system like CashAnalytics can go, it's in the cloud, it goes onto your computer, and before you know it, it's there. And then it was a question of getting the information in there. And yeah, you can see we could work in parallel. We worked on getting the TIS, the bank statements in there. Again, it's just surprising to see how these systems, there's a little bit of work to do, of course, but they do fit into each other. So all of a sudden our bank statements were in there. And then all of a sudden our SAP ledger, that's what it's called, smart ledger in the system. All of a sudden these accounts receivable, accounts payable were in there. So again, work to be done with our SAP people, but you get the right people in the room, and then they speak a language that I don't often understand, but eventually it works and it's in there. And I think that's how it works. Eventually, once the system was in there, we could start training people on it. We did that in a number of sessions together with CashAnalytics. So it's not a difficult system, and I think that's one of the reasons we felt very comfortable with the CashAnalytics, because it just a system, when you open it up and you quickly can find everything and navigate easily, is really nice to work with, and therefore the trainings, I think that helped as well for people to feel comfortable with it, of the different pieces and where the information is coming in and how to make their forecast. Then we had a rollout. We did our first reporting. We did it parallel with the old system in September. So they still had the old system, and then they used the new system, and that offered a lot of learning. And I think one of the things I remember best is when we started to do the mapping, because what you can do is you can get, for example, TIS comes in with the bank statements, and then you can put in rules. You can put in global rules, or you can put in local rules. And all of a sudden, once these rules are in there, it goes into your forecast actuals. And it's, we were just enjoying this so much, because it's so nice to see this happening, that all of a sudden work that you had to do and get information there, put it there, it's all happening automatically. And I think that's really, that it really hit us then, how nice it is to work with, the data's there, and that the data just automatically goes into your actuals. And then you can see, are we there, 80% mapping, 90%? Well, we figured it out to have 100% mapping. So these actuals can automatically go in there. You can do adjustments, but it comes in there automatically. And it's the same thing with the accounts receivable, accounts payable. You can do certain mapping to get it into your forecast. And then with the actual forecast for the next few months, again, it's a question of mapping. So in a perfect system, the forecast basic is almost in there. So yeah, maybe coming back to the stages. So September we did the rollout, first reporting cycle, and October was the first go live and first forecast on CashAnalytics, and immediately we dropped the other system. So we're now using only this. So I'd say in a way the project is done, and now it's a lot of fine tuning and working more with one-on-one with the controllers to maybe look at their mapping again. It's getting the reporting out that we want. There's a lot possible. So it's also for us to understand what our COO, CFO needs, what local people need. And coming back to, our learnings, I always call them kind of the key success factors. I think executive level sponsorship was key. It was easy to get this through because our CFO has been wanting this, and our COO as well. And they were very involved in looking at the different systems. So I think that's always a key success factor. We mentioned it before, the good as-is analysis up front makes you feel comfortable that we've looked at what we really need. We've identified the pain points, and everyone has been heard. And I think that's really important, that the controllers have been able to be part of this from the very beginning, and they also looked at the RFP. They looked at all the systems, and we made the decision together. I can't say enough. Experienced project manager who is also a SME. I think having Fynn on board made a huge difference because it's someone who's focused on it and understands the languages of the different people we needed to talk to, and that really helped move things along. In general, I think good collaboration with our own people in the SAP group, the Tagetic group who did the mapping with us, and of course with CashAnalytics. Issues we came across were quickly resolved. I think those are, it's just really important to get it to move along. And yeah, the last thing is I think this is probably the most important, the change management aspect. The controllers are doing something different. We have a couple of entities who are much bigger than others. So yeah, you obviously want to focus on those, Germany, for example, or France. So working closely with them, doing one-on-ones where necessary, because yeah, some people, it's always funny. Some people are very quick at a new system, and other people just need a little bit more hand-holding, and you have to realize that, and you have to put in the time to do that. And in a way, it was good for us as well, because we as a treasury join these meetings, and we do our forecasting, but it's not as intense as the forecasting that they do. So doing the one-on-ones, I think, is a good learning, and I think we'll actually continue doing that with them. So yeah, that's this is the project plan. So all in all, I mean, we've worked on it this year, but if I look at how quickly it, if we look at starting July, August, how quickly it actually is up and running, I think it's amazing.
So Evelyn, can I just pick one of the things that I caught in that around the local stakeholders? What was, I mean, sometimes the biggest challenge is getting them on board because this is something new or something different, takes more time. Can you tell us a bit about how hard or easy that was, and for people who are struggling with their own stakeholders, how to get them on board?
Well, I think what you see is that I guess the controllers all feel that they are doing things a certain way, and that their situation is always different than the rest. And I think it's convincing them that that we want to try and look at things globally. And for example, a good one is when we have the forecast coming in. Basically, it makes sense to use a forecast, the P&L forecasts, the budget for your cash forecast as well. And so we put in a general rule that the client collections and then plus 75 days. So automatically it comes in. And some groups just felt, that they found it hard to use this information, and they'd rather just do it as they always did and almost re-key it in. But yeah, when you sit down with them and show them how it works, or show them, for example, that their accounts receivable, how they can use the system accounts receivable are all in there, and again, you can put in rules on when you want those to hit. You know, in some countries the DSO is 90 days, and they always pay late. What's nice about the system is that it can actually learn how your clients are paying, and it can look at historic patterns, and it's teaching them. I think it's taking the time to understand their pain points and what they need for their reporting, and then to work together to try and convince them that they can use the system and get it out. And I think that is a challenge. And as I said, some entities find it, you know, they from one day to the next they started using it, no issues, and others there's a little bit more hand-holding to do and convincing.
It's always a human element, isn't it, that is critical in these things. Conor, what were your own learnings? Was this pretty standard, anything surprising or something new to you?
I would say not surprising. I think it was very, as Evelyn has outlined, it was very smooth from our perspective, mainly because of the work that Fynn and Evelyn had done in advance and in getting ready. You know, so you know, I think in some ways this plan is nearly, again, kind of textbook. You know, I think the broader learnings were, you know, to Evelyn's points around the business units and the users. It's a really important consideration. There's no such thing in these days as simply just a treasury tool or a finance tool. Something has to provide that wider business value, and that's something that we're really focused on is the evolution of our solution to help the business, not just treasury. And I think, you know, again, to a couple of Evelyn's points, it was, you know, when you can show them what's possible, again, with their data, right? You have the data here, you're spending time pasting numbers from one spreadsheet to the next, right? What can you do if you have your collections data to hand, or you understand how certain customers pay in far greater detail, right? What does that mean? And that is something that genuinely adds value to their processes, not just from a forecasting point of view, right? Their broader cash management, working capital process. So I think that's a really important consideration, is that you know, when building the business case for this type of change, there has to be value outside of just the treasury, right? And that's key. And when there is value outside of the treasury, the business case becomes a lot more compelling, right? So the CFO is yes, of course they care about treasury, but if you can say that, hey, look, here's the benefits, even if it's relatively small to start off with, to the broader business, then the business case becomes a lot stronger. You know, I think I suppose just the other key learning, and again to come back to the data theme, and it is really when the treasury team or when the people involved start to really understand the data that they have to hand and how it can be used, that's where we really see the turning point in them understanding what's possible, right? It's data that they may not be, particularly AP and AR data at the treasury level, they may not be interacting with that on a daily basis. They may not necessarily know where it is specifically, but when they get their hands on it, even outside of a system, and start to understand what's in it, it's quite straightforward. It's quite basic. It's a very basic data set overall. However, when there's the knowledge of the data set and what it can do, then, you know, that's where we find the attitude changes and the process changes to something that's a lot more feasible than when it may be at the beginning. So, you know, so that's the key thing, is for those people who are considering something like this or want to move to it next year, just start looking at your data right now, right? It doesn't mean you're involved in a project. Talk to your SAP colleagues, make friends with your SAP colleagues. I think that's a key message.
Yeah, maybe one other thing, you know, one thing we have a lot of is our intercompany trades, we call them, so payments between entities. And what we've been able to put in the system a way that only the people paying will put it in their cash forecast. Because before we had people who paid, they put it in, and people who expected to receive, and there was always a disconnect there, and it was huge, and it was hard to figure this out. And yeah, this is you know, again, we're looking at maybe netting in the future, but at the moment this is the way we do it, and the system is helping us to make it simpler. You know, you put it in, and if you expect to receive it, go talk to them and you know, make sure they put it in. And this is, I think, where our treasury can start adding more value as well, to work with them, to have let's say regular meetings using the tool and saying, look guys, this is where we are. So, you know, what about, are there more payments coming in? Put them in. We can follow it a lot more. Things like intercompany loans, we now will put them in top down as because we control all these loans. and we control the interest. So I think that also gives a little bit more transparency that we know it's all in there. Because before we had to, maybe let them know or mail it. And now actually it's very easy to just put it into the system, all of the interest payments, all of the intercompany loans, intercompany trades. So things like that, I think we'll see more and more of that with the tool, ways to use it and to add value.
And I guess what I'm hearing, Evelyn, is that when you talk about things like intercompany, and that was one of the questions that actually came up, is that by using tools like this, you can start to standardize processes and then apply the rules, which I think, certainly from my experience, is really quite critical. I'm sort of conscious we've got about 10 minutes left, and I want to make sure that we sort of capture all the key bits. Fynn, we hear from Evelyn, it's gone live. Can you tell us a bit more about some of the new processes that underpin the cash forecasting?
Yeah, sure. So basically, when you look at the process now, and especially when you think back to the process as it was up until, let's say, October, we see that we reached quite a lot when it comes to automating the process, making it more transparent, making it more harmonized, and this all ties together with getting the understanding of the local processes that now aren't local processes anymore, but are harmonized global processes that are executed locally. So we are now talking basically around about 3 time horizons. We're talking about the forecasting process, where we have 3 distinctive data buckets. So we have our actual data coming from this being mapped automatically, as Evelyn said, using local and global rules that are aligned throughout the firm. We have our AP/AR data coming from SAP, supporting really, really strongly our short-term forecast. So we're talking about the first 60 days, as this is round about our DSO, and to a large extent also our DPO. We have reliable accounts receivables and payable data in there. Also, this data is coming automatically from SAP, is being mapped using distinguished rule sets per entity, populating our forecast. And we then have our longer term forecast, everything going beyond the 2 months, coming from or being supported by the data coming from Tagetic. And then there's basically the piece of art, translating a P&L forecast to a cash forecast, which led to a little bit of creativity needed to navigate around accounting principles and things like that, make it a little bit real worldy. But in the end, what we see is really we have each of these time horizons being supported by automated data coming in, and then we have our controllers who can now put in their own knowledge, their specific business knowledge of their local entity needs, to add in what we saw on a couple of slides ago on the left-hand side, this departmental figures, the knowledge that they have that a system can't have. So Conor said in the very beginning, it won't be 100% automated process. It's not a robotic process, and that's not what we want either. But it's a process that really lets the people doing it focus on the key pieces of information that we need them for, and not having them misused as machines that copy data from spreadsheet A to spreadsheet B. And the amazing thing that we saw was basically when we had this process together, the amount of processes that now we were able to support from a treasury perspective. So it's not only a self-sufficient cash forecasting process where we say, well, we have to do this because we have to do it because our CFO asked us to. It's really an additional insight that we can provide from the treasury perspective on payment management, on intercompany management. As Evelyn said, we have now the information basically at the tip of our fingers. By a push of a button, we can see, okay, who is paying how much to whom, where do we have our deviations on a month-to-month basis. For us as a project-driven business, it's really important to have our collections monitored closely, our credit facilities, and of course, in the end, we're treasurers, we're our cash people, to have our cash managed properly. So out of this one process, we're basically able to support a lot of other processes. And this was, in the end, really what brought the biggest added value out of the new cash forecasting process, I would say.
Super. So, Evelyn, just sort of reflecting, just very quickly, could you tell us about how you and the team feel? And you said that it's finished. Is it really finished?
I think one thing we might say, I feel we should have done this earlier. I think we should have done this a few years ago. It was something I always wanted to do, but it was just, the hurdle was there. And so again, maybe that's advice, it just feels, I feel a lot lighter because there's a system there that's doing things for me that I feel comfortable going into, that I actually enjoy going into. But yeah, it's certainly not finished. I think it's the beginning of working differently with our controllers, feeling more empowered because we have more information at our fingertips, and it's being smarter. I can go in there, I can drill down, and I can actually see the clients that are paying, and that's really nice to have in one place. So I think it's an ongoing process. We're going to be refining it. We're listening to the controllers, what they need, and management as well. So maybe the beginning.
Super. So I'm going to sort of try and bring it to a conclusion, and I'm going to ask each of you just to share sort of a couple of final thoughts for our audience. Evelyn, I'm going to turn to you first.
I think it's what I just said for the audience. One is, if people would like to speak to me more about the project, very welcome. Again, don't be afraid of doing something like this. I think it adds a lot of value to a treasury department, and maybe just a thank you to Conor and his team, and also especially to Fynn, because I think without them, it would have been difficult to do this with our own treasury team. That's for sure. Yeah.
So make sure you're resourced properly to get it done.
Yes, definitely.
Okay.
Yeah. For me, it was definitely interesting to see what I normally do externally at clients internally. So it gives you another perspective on the things, and I think it was already brought up a couple of times during the session. The real focus also now going forward will always be the change management aspect, because in the end, a portal or a tool is a means to getting the forecast together. In the end, it's always a data and people driven process, I would say, to really get and ensure the long-term buy-in of all the controllers, in our case, or the contributors to the forecast. And make sure that now that the system is live, you really refine data sets, refine models that you're using, refine approaches, so that basically the forecast can get better month over month.
Super. Conor, before I turn to you, we've got a couple of questions which I thought we'd sort of throw, and we've got a couple more minutes. I know we're going to run over a bit. So maybe this is one for Evelyn, and Conor, maybe you can add it to your sort of final thoughts. So I'm going to read it out. It says, when I think about cash forecasting, I regard cash movements from AP and intercompany, it's all within the control of the organization. So it's not actually forecasting, but more aggregating data. And they've asked about being told more about forecasting receivables, systems intelligence that can be applied, especially around receipts. Any thoughts on that, Evelyn?
Forecasting for us, again, we do a budget for the year, and people that's a bottom-up budget, actually it's more maybe top-down, bottom-up as well. But as I said, the first 2 months can be forecast quite well with the accounts receivable, accounts payable. After that, we base it on the actual forecasting that we've done, the P&L forecast. But I think what you see in the system is that we learn as we go along about the payments, and you could put in the forecast due date, or you could say due date plus 30, or due date plus 60, or you can do historical rates. So you learn, and you can actually go in and see who's paying well and who's not, and that's where the learning comes in. The system helps you to do that, and as a result, you can adapt, say, even per accounts receivable or customer when you expect payments to come in. So I'm not sure if that answers the question, but that's the way I understood the question.
Yeah, no, it's definitely one way in which I guess you can forecast receivables outside of term. Conor, do you have any thoughts on that sort of challenge from the audience, and then just a couple of wrap-up thoughts?
Yeah, it's an interesting question, and it does come down to the actual process of forecasting. And looking at splitting AP and AR out into two separate areas, which they are. Yeah, look, the AR is all about understanding, as we call it, customer payment behavior. Okay, so yeah, it would be, if it was simply a case that everybody paid to term exactly, it would just simply be a consolidation exercise, right, an aggregation exercise, but that's just simply not the case. And in BearingPoint situation, they have thousands of customers. All of our customers have thousands and hundreds of thousands of customers in some instances, and understanding how those people are paying and how those companies are paying is critical to your forecast, right? So, and that's where CashAnalytics, that's where a system adds value, is being able to analyze that data in real time as it's coming into the forecast and automatically adjust, right? To say, well, we know something new now, our understanding is slightly refined, and that learning is automatically applied to the forecast, right? So that's the key thing on the accounts receivable side. I would also caution not to underestimate the impact of that type of analysis on the payables side, particularly on large organizations. And I know payables are, yes, of course, under your control. However, in a lot of cases, we see perhaps more interest or more time being spent in the early stages of a project on payables. And when you start to show a company their own payment behavior, right? How are you paying versus your term, where there's opportunities to improve? And that's where the low-hanging fruit sometimes is from a working capital point of view, is saying, hey, look, we're shining a light on how you're paying your customers here. There's opportunities here to change things and to drive real improvement. So it's all about learning. It's all about continuous learning, and it's all about the application of that learning on an ongoing basis. And, again, that's what a platform will provide over and above. It just would be impossible to do this in the spreadsheet. Yeah, that would be
That's brilliant. And it does, certainly from my own experience of treasury and cash forecasting, I think two observations I have. One is I always hated cash forecasting as a job. I always hated being asked to lead a project on cash forecasting. But listening, without being corny, listening to the three of you today, the sort of excitement and enthusiasm reminds me of, if you do it well, the insights you learn. And I don't know whether it's Conor, you or Evelyn or Fynn said it, about not just the treasury function, but actually about the business. Conor, you talked about your own AP behavior. Evelyn, you talked a bit about, are customers paying you on the terms that you assumed or they're meant to be trading on? These are incredibly valuable. And I know from one of our previous conferences, somebody talked about how by getting more insight around forecasting, especially around the collections, they're able to manage credit control more accurately. And this is a pharma company that actually ended up being able to deliver more medicines to their hospital customers more frequently because of the power of their cash forecasting. And I was really staggered because as I said, generally in industry, when I was asked to do cash forecasting, I have to tell you, my heart always sank, because generally I get it, we all get it wrong, and then you have to explain to the CFO and spend a huge amount of time. But I really take away from this just how, if you do it well and with the right mindset, it can be such a powerful tool across the overall business. And there's no denying your excitement and enthusiasm for this. So it's still got to be something in it for everyone listening. Thank you for indulging that little anecdote from me. We have reached the end of the session today, and I think with the help of Evelyn, Fynn and Conor, hopefully you're much better informed of the challenges and benefits of using technology to enable a data-driven cash forecasting process. I know I'm looking to share some more insights with the Treasury folk that I speak with. A reminder, please take time to fill in the survey. It's always really important to us. And I want to say thank you again to Evelyn, Fynn and Conor for sharing your insights and experiences, and to CashAnalytics for supporting this session. Thank you also to the audience for joining us and the questions posed, and I hope you enjoy the rest of the festival. Thank you and goodbye.
Thank you.
Thank you, everybody. Thank you.
Right.